Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, can hear you loud and clear. And welcome back to At the Buzzer.
Welcome to At the Buzzer, everyone. Welcome back. Happy Tuesday. The day before Fed decision. The day before the Fed decision. Happy Tuesday. Today is September 16th. If this is your first time watching At the Buzzer, the goal of this segment is to review what happened in the markets for the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay, been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and hopefully help you become a better trader.
Thank you for that, Coach Paul. You are all our chat, our audience. Thank you for joining us every day and let us know how you did today. Were you up on the day, down on the day, anything that you learned from the day? Did you follow your plan? Did you not follow your plan? And how did that end up for you? Shout out to Dan Trader in the chat, always number one up there. Good to see you. And everyone else joining. Richard Harris says, today drained my brain. Every trade took forever, which burns my brain cells. Days are going to be like that, right? And it makes sense that we're seeing maybe that type of price action the day before big rate decision. We will see how this goes tomorrow. We will see how this goes. Let's take a look at the news in the Trader Hub. As far as planned numbers goes today, we had U.S. retail sales come out 0.6%. Forecast was 0.2%. Prior was 0.5%. So retail sales a little bit better than expected. Canadian CPI came in a little lower than expectations. Industrial production came in at 0.1%. Forecast was negative 0.1%. We also did have a 20-year bond auction. As far as the rest of the news goes, we had Fed governor appointment. Myron is officially a Fed governor and a voting member who will be voting on the rate decision tomorrow. Keeping his job at the White House as well. Comments from Myron saying that it is important for the Fed to stay independent. That is a President Trump appointment, but we know that the Fed is supposed to be independent of what of any politics and any government. So we will see. We will see what that Fed rate decision is tomorrow. Coming in right away, you get appointed, and the first thing you do is vote on a rate decision, which we're expecting a cut right now. 97% probability of a 25 basis point cut. Some traders may be pricing in 50 basis points, but we will see if the Fed surprises us at all. Anything you have on the news, Coach Paul?
No, I think it's just that retail sales came in a lot better than expected. So that was about the biggest news. Now with Myron going to the Fed, there's really he gets the vote, but he's not part of the quote unquote majority. I mean, so we'll see. But a muted day with news and with the range reflecting the proverbial FOMC decision day. So everything else takes a back seat.
Decision day is tomorrow. Steve says, can you clap for money? What you mean by that? Also, we know that there were some issues. There were some issues with Topstep X. So if you were affected and it affected your trading, make sure you go ahead and reach out to support. Thanks to Topstep Official for posting and pinning that to the top of the chat. Make sure you reach out to our support team and we will take care of it for you. Brad Sims says, follow my plan, gave back some unrealized, but let trades play out, ended up $75. Hey, it's green. I ended up the day $40 today in this XFA. It's green. I followed my plan for some trades and not so much for others. Turned out to be a scratch, but a lot that I may be able to take notes on from today. Tim Artis up $48 today. Hey, not every day is going to be a major winning day, and that is okay. Take a look at these markets. There are 36 different markets we could trade with Topstep accounts. Today, to the downside, we had copper down 0.34%. Cattle down 0.44% after a 2% update in cattle yesterday. And platinum, our biggest percentage mover to the downside, down 0.73% to the upside. We had crude oil, big move in crude, up 2%. Natural gas up 2.56%, and heating oil up 2.78%. It was a day of the energies. To talk about our big four, we already mentioned crude oil up 2%, the S&P down 0.12%, gold making a new all-time high and up 0.3%, and the Nasdaq, I believe we made an all-time high in the Nasdaq yesterday as well. Pretty much ended the day flat, down 0.05%. JD says I took a great loss on platinum. Let's take a look at the equities charts. I'm gonna let's pull up a Nasdaq chart here. Uh, we made a new all-time high, Coach Paul. What are you seeing on this daily?
Oh, well, we're seeing what is that? Oh, a tiny range. um, what is that? A range for ants? Is that right? What I'm seeing?
That is correct. That is
Um,
correct. Yeah, that is a about 140 point range in the Nasdaq on the daily.
yeah. So there we go. Balance in front of the FOMC. Um, traded uh, both sides. It actually traded higher yesterday, came back and really did nothing. I mean, there's a whole lot of let's see what happens tomorrow. So, but solid um, direction still intact, near all time highs, onward and upward.
Onward and upward for sure. Little bit of a sell-off towards the end of, or actually in the New York session, and then we ranged around for a little while, which is not surprising, right? Coming into this Fed rate decision tomorrow. Take a look at last night's price action. We opened up, and we talked about this during the opening call. If we were not going to continue to push higher, Paul and I love to mark out this first 30 minutes of the Globex range. That came into play as soon as the New York session opened. If you go back and kind of review that opening call, one of the potential cases that we talked about, Coach. I know you had a pivot level down here as well. Just looking at some of the things that we had the potential to trade back to, it was value area high from the regular trading hour session yesterday. It's kind of where we opened up at 525 area, 24 525, bounced off that, and the market came right back to value. Um, Back to the point of control, volume point of control. Shout out to all our volume traders. Volume point of control 24,503. So paying attention to where some of the volume trades, however you identify it, can help set up trades, at least in my opinion. Um, Last night, Coach Paul, we had a pretty nice rally.
Well, last night or yesterday, we finished near the highs of the day, right? And that momentum carried through Asia into Europe. I did have resistance, first level resistance, 24, 637. We got there last night, right in Europe. Um, Now, the fact that we moved that much on really what was the volume? Very small volume. Is if you were long, boy, you have plenty of time to take some money off the table last night. But looking at we had urgency on the buy side. Seems who wants to sell? We're near all time highs. So right back down into the value from yesterday, point of control, which we went sideways. Um, but it was we had both traded both sides. It was some great opportunity last night for buyers and sellers.
Yeah, pretty nice rally into that 24 650-ish area. We didn't tag 650. 647.25 is the new all-time high in the Nasdaq futures, and then we turned around from there, right? If we look, Coach Paul had that resistance up there, 24 637. If you're wondering where that level comes from, make sure you check out the Top Step levels webpage. Levels are being updated there. But let's take a look at a shorter time frame. We had a decent amount of volume trade up here at these highs, and when we got below it, we need to find convinced buyers up here above major levels, above 600, and on a day before a big decision, I'm not surprised to see you know pretty flat price action and come right back. So New York session opens up, and we got some urgency pretty quick. Here's the first 3 minutes of the New York session. That red box here, move this VWAP over, and pretty early that VWAP left the range. We got right back down to the Globex session open, and that was the biggest move of the day in the Nasdaq here. From that point, we kind of just range. We saw Dakota during fast markets just trade the range, just buying near the lows off of these 25s until that pattern breaks. But then another major level, and we talk about this a lot, watching the market's reaction to these whole number levels, 24,500, where we didn't get a ton of volume. But we didn't have enough convinced selling to sell through that major level either. We can see VWAP started to flatten out, stayed above that Globex high, um, Globex opening range high, and just right back up into the range. So decent trading day, right? It wasn't the tightest range, but if you found yourself getting chopped up, just ask, how many of the trade setups that you took were high quality, right? Especially in this range, there were trades to be had for sure, but if you're looking for breakout trades, that today was just not the day for it in the equities. Anything else you have on the Nasdaq, Coach Paul?
No, one of the things, today's volume point of control was higher than yesterday's, and we closed right at it. So that's still, like I tell, it's still very friendly. This market is owned and it keeps rising higher. We keep getting higher um, levels of volume control. Unless tomorrow we take out a couple days of that action, which I'm not saying it's going to, but this is still solidly a bull market, and still in a situation to buy the dips.
In a situation to buy the dips. If you're looking for those top step levels, I just put a link in the chat there so you can take a look at those. Also, the top step levels indicator on TopStep X, you can use that as well. Sometimes you got to refresh just to get it to show up, but it does show value area high, low, Hogs, weekly kickoff levels, settlement, all these prices here. You can choose which ones you do want to look at. Let's take a look at the S&P. Very similar day here in the S&P, closing lower than it opened. A lot of indecision right below uh, that 6,700 we rejected, made a new all-time high, 66.9675. But, again, how much of a directional move are we going to see the day before the Fed cuts rates? And made a new all-time high and sold off the way the S&P has been making all-time highs this entire way up. Anything you got on the S&P, Coach Paul?
It's very much the same. Maybe a little weaker than the Nasdaq.
Okay.
It did, you know, it was a little heavier than Nasdaq. Otherwise, um, what else is there to say? Just nothing burger of a day.
Tomorrow.
Especially if you just take off the night and just have the regular session. We still have a gap to fill. That'll be interesting tomorrow. But other than that, what was the range was
The New York session, 27 points high to low in the S&P. That gap
27.
Coach Paul is talking about is regular trading hour gap, 66.45 up to 66.67. We held that gap, but just sitting under there, under where price is right now.
Yeah, and look at this. We gap higher from the day session 2 days in a row. So taking a rest up here makes sense. It looks different when you do that. I always like to do that now. I didn't do that before, but you have an idea here of coming into tomorrow. You got some couple gaps to fill. You might find some level of support at those areas. I think they're going to be important levels. But while we filled that, we held the next one. So we'll watch that gap from what is that would be from Monday morning
Yep.
or from Friday to Monday morning. Um, I think it'll be key tomorrow. Other than that, we talk about tomorrow's going to be a long day.
Tomorrow is
Remember,
going to be a day for sure. If somebody can get me the date, if you can, please chat. The date for the last FOMC meeting, and then the last time the Fed cut rates was December. It was December 2025, 2024. I think it was December 18th. We'll try to find it. Just kind of look at what that price action looks like in the equities before, a rate decision. And of course, every time is going to be a little bit different. I know some people were talking about, hey, the last time the Fed cut rates, we sold off pretty heavy. If you look at there was like a 2023 rate cut, I believe, and the market rallied. So it is going to be different. December 18th was the last cut. July 30th was the last FOMC meeting. So we'll take a look, right? What we know for sure, Coach Paul, is volatility. Uh, Once that decision comes out, we can't even say for sure, but to a high probability, I'm going to expect volatility after that decision is made and during the press conference.
yeah, I know a lot of traders who just won't trade tomorrow.
Yeah,
At least equities, they go find something else. Um, we've seen many times just how unwieldy it can get. I'm not advising that, but you know, it's one day ahead of how many the FOMCs. There's it every other month. Great decision. Um, sometimes it's worth not trading. Um, I might not trade equities tomorrow myself. I'm thinking about it. But if you do, remember the decision comes out at 1 o'clock Central Time,
one central, correct?
and then 2 o'clock Central Time, the Fed chairman speaks. So we're talking most of the day. And that it can be very, very violent in that hour. I don't know, and this thing can be, it is. So I'm not, beware. Sometimes the decision is just to avoid it and wait for the next day and maybe find something else to trade, or just go take the day off and let the big dogs beat each other up. That's always can be a good decision also.
Absolutely. Correct. We did not have any rate cuts this year, but the Fed has the meetings. The last rate cut was December 18th. Let's take a look at gold, and then we'll get back to looking at the charts on those prior Fed days. Gold, new all-time highs, 37, 39, 90, new all-time high in gold. Continuing this rally, we hear about all of the investment coming into gold, all the money coming into gold, and maybe not in other places, and continuing to push higher. Hogue has a weekly kickoff level up here at 38.86 in gold. That is a little less than 5% off. We got 3 days to get up there. Can anyone think of a potential catalyst that could get gold moving? Not saying that we're going to get up there, but it looks far until it isn't. It looks far until it isn't. What are you seeing in gold, Coach Paul?
Same thing. It's a rocket launch, still nothing to stop it. I find it interesting. We keep making these contract highs in front of FOMC. Further, to me, it's further evidence of the lack of confidence in the U.S. dollar, to put it mildly. I think that's money that used to go into treasuries. So I mean, there is nothing. what you ask yourself, one of the things when to keep ourselves in a mode of anything can happen, right? And not in a fearful mode, but just to understand if we reverse that chart, I mean, who's in control? Wow, I'm even more bullish. Um, there's what in that chart says that this is over. And if you had a checklist, there's nothing. So, maybe Hoag's number gets hit and we rally 5%. That's a possibility. Not a probability, but a possibility. But looking at that, I mean, this is a runaway market.
Is continuing to run. Let's take a look at a smaller time frame. Let's take a look at the half an hour. Dakota and I were both looking for trades in gold during slow markets last night. Take a look at that first half an hour open. 37.15. 37.15. Give me 1 second here. We put on a volume profile here and see if it shows how important that price really was. Uh, So there was a buyer. There was a on today's Tuesday. So yesterday there was a buyer in this range here. It was about 37.16 down to 37.14. Right in this range here. 390 contracts traded in a second. 90% of that was positive delta, which means a market order buyer, and they defended that position with it seems like every dollar that they had. uh, where the market would not trade lower than that price, right? We can see it, this spike of volume right here, this 30-minute candle here, uh, but a really nice line in the sand to potentially look for longs off of that area. I know Dakota and I were talking about, hey, if 15s give out, we may see a flush of volume back down to 3700s, but we really never got it, right? And that area kind of held the entire time. So I'm keeping this range on my charts for tomorrow. Um, See how the market responds to this if we get back down here. Uh, About a 2 point range, but a ton of volume traded in that range. So I'm going to keep paying attention to it. Uh, Last night, we kind of checked into this price. Price went, volume didn't. Volume was pretty flat in the overnight session. We make an all-time high. We come right back to this price. What are you seeing here in gold, Coach Paul, on the shorter time frame?
I mean, the shorter time frame is level trading, balanced trading to the upside, as we know. Don't get caught short. I mean, if you have a sell, what are your expectations? I'm not saying you can't sell, but cover up quick. Um, you're trading against the wind. Now, what did we have at the top today? Did we get any? We didn't even show any sign of failed buying on the top. It just stopped. There wasn't much action. What do I mean? We didn't have a J trade at the top. So we
Okay.
didn't get exhaustive buyers. So the market is subdued. Um, but we still managed to finish higher on the day.
Yes, we
Um,
did.
and we're starting to find some buying here. Look right on the close here. Um, hardly. Now let's take a look. We haven't talked about that in a while. Is what time does gold close in New York?
11, nope, 12, sorry, 1:30.
1:30.
1:30. Let's take a look at that. It shows up pretty good on a 5-minute chart, but looking at this the 5-minute candle that starts at 1:25 Eastern time, 12:25 Central. That's where gold settlement is coming from. But every once in a while, there is a decent trade after the fact. from that range, right? Kind of looking at it like an opening range trade almost,
Hmm.
because gold still does trade a little bit afterwards. It's not a trade that we looked at in a little while, like you said, Coach Paul. I know we mentioned it a couple of months ago. Traders started to take that trade or just keep it in their back pocket just in case they needed a trade later in the day. But nice trade off there. Not the biggest trade, but 7 points.
Hey,
I'll take 7 points in gold.
yeah,
Uh,
even on the micro.
back to what you were saying about what are your expectations for shorts here. I actually did take a short in gold, and it was actually what got me back into profit for the day, but had to trade it with reasonable expectations. Now we had some selling down here in this range. You can see all these wicks over here. When we broke this to the downside, uh, I got short from 37.23 in gold. And like Coach Paul said, and I just showed you guys that 37.15 area where uh, they're buying with all their money. I took a short, but I have to have reasonable expectations. Do I want my short to go to 3,600, 3,700 maybe? Sure, I want to. But does the market agree with that? If the market doesn't agree, then I have to manage my position as I see fit. So short from 37.23. We had a couple of prices here to kind of deal with. We had settlement, which was 37.19. You can see this blue line here. We had 37.15, which was last week's high, right in that area where we saw that bigger selling. Sorry, that bigger buyer that came in. So I have to manage this position uh, with what the market is willing to present, right? If I hold on to this trade, it turns out to be a loser, and gets me deeper red for the day. But having reasonable expectations for where the market can go, uh, you know, uh, there's an opportunity. I talked to was in the VIP meeting in this trade. I talked to the VIPs. To me, I would consider this an A-minus setup, just for how I was seeing the market at the time, kind of breaking through these wicks. An A-minus setup doesn't always mean that it's going to be the trade of the year either. It could be an A-minus scalp trade, right? Where hey, to a high probability, this scalp has the potential to give me X amount of points. Um, so but have to have reasonable expectations. What's my P&L? I pristine fiber, $40. Nice recovery day. I am happy. Never been happier to make $40 today. Never been happier to make $40. All right. Let's anything else you got on gold, Coach Paul? We also had silver. Shout out to the chat. Silver made new all-time highs today. 43 4 43 43.50 new all-time high in silver. Again,
All-time high or contract high?
contract high. Is that an all-time high? I don't think it's an all-time high.
No, I'll
Not
tell you why.
Oh, yeah.
$50
Yeah, you're
silver was
right.
1979, 1980. I
Right.
know I marked it on a chalkboard when I first it was one of the first things I did when I came into the business.
Wow. Okay, yeah, nowhere near we're not close to all-time highs in silver. Sorry about that. Contract highs, and multi-year highs. We're
Year.
we're going
Yeah.
back to 2012. Yeah, we're going back to 2012. We haven't seen uh these prices in silver. Interesting.
Yeah, silver's chugging along. It was interesting is what was copper was down pretty big today?
Copper was uh down 0.3%.
Uh, oh, well, that's the daily,
Yeah,
right?
that was the day
I'm
of
just
reckoning
kidding.
in
Okay.
copper on 22% day. Yeah, this market hasn't done anything since then. Looks like that crude oil chart.
Yeah. So it's picking up a little bit, but it's that it can't trade. It's untradeable for me. I won't trade it. But when you see that kind of stuff, unfortunately, copper was hard to trade. Period.
Mm.
That the first was the big. We've seen some crazy days, which takes that volatility out of an equation for smaller accounts that trade. You can't if you can't afford to be wrong, you can't trade, you can't take the risk. So silver looking great.
Yes, it is. Yes, it is. Made a new contract high here. Uh, Silver is pretty expensive contract if you're going to trade it. Maybe suggest trading the micros, but a trend is a trend, right? A trend is a trend, and right now we are seeing silver continue to trend upwards with gold. Take a look at crude oil. Are we breaking out of this range, or was this just a little bit of an extension? What are you seeing in crude, Coach Paul?
Well, we're still in the range officially. Um, it's offering some great opportunities. But right here, and I'm not a range trader, and it's been paying my bills lately. So we're back above the 200. But once again, when I talk, I've never seen the short term to the long term moving averages this tight.
Yeah, there's
And I
less
think it can
than
still continue. Um, but what as on a daily, when we see that, if we get some movement out of this range, I always favor the long side because it can go up more than it can go down. It's just maybe from being in commodities for 40 years. It might be my inner bias. But I'll ask the audience, do we still have that record short interest in?
good question. I'm gonna have to ask JD that tomorrow when we do the uh, opening call. I gotta ask him about that.
But we had a it was a great trade if you look at the half hour.
Yes, it was. What is that white
What-
line down there?
What's that white line?
What is that white line down there? That is a 200 moving average on the 30-minute chart. We did switch down to a 30-minute chart. And so interesting what we see here, right? And we talked about doing this a couple times, Coach Paul. Um, you know, attaching a view up to the candle that tests that moving average and seeing how the volume responds from that point. Uh, to start the session, let me mark out that 200. Take these off. All right, to start the session, a little bit of a push to the upside. Volume tried to leave, really no extension. How much do we really see crude oil trade during uh, the Asia session? Sometimes we do, not a whole lot, but we know when London comes in, it does start to trade. Here's that London session open here. And then again, attaching a VWAP to the candle that tested that 200 moving average. Uh, Volume stopped, right? So price traded below that 200 moving average, Coach Paul, but volume didn't. And just turned it around. Uh,
Yeah. You know what's interesting? We found this a little bit of a pattern. Usually, London has been setting the tone, and London came in and sold it,
yep.
or there were sellers in it in Europe. Sorry, France, Germany, not to include you, but it's the Brent crude. But interestingly, in the last couple of days, we've seen New York take the buys on the buy side, lead the way, and we saw that again today. So um, when we touched that 200 and we put on that candle, what did we see with VWAP? It was flat going lower until we closed above VWAP.
Yep.
And
Flat here. That London Open was the highest 30-minute candle at that point. And it took a while to close above that, right? It took 4 hours to close above that range. But that is where the selling stopped, or the selling met buyers, or however you want to frame that. Um, that is where it stopped, right? Right around that $63 level. That was kind of yesterday's range as well. We pushed lower. Uh, Sellers met buyers, and from that low, we're talking about almost a 3% move. So, and people have been saying, crude oil. Someone asked during the opening call, "Why do you guys even talk about crude oil anymore?" Uh, high to low, 3% move. Uh, Not catching the entire thing, but a $2 range. You can find something here. Find something here. You got to be patient with crude though. If you're looking for breakout moves like the Nasdaq, you may not get it today. Was a pretty aggressive move to the upside, but definitely presenting trades in intraday time frame.
Well, let's look at the 5 minute on the New York Open.
New York session open, 5 minute is right here. Here's the 5 minute. We took a short. Tick size for crude. It's what is it? $10 a
And
tick in the minis.
yeah.
$10 a tick. Uh, here is you can trade the micros as well. But here's the 5 minute opening range, Coach Paul.
So that view up never left the range. Um, Price did, and it, but that's what's interesting when you. I think when you have this size of record shorts, I mean rallies can go be stubborn. I can see why would want to sell. We broke out in price, but even then, look at we had a J trade on a New York session.
If we just looked at regular trading hours, yeah, we did.
Well, right there on the lows of the New York session.
So this one maybe a little bit of a fake out. This was more volume than the open, and maybe you took this trade and it was a loser, but then it did it again, right back into that area. We closed above, and this one played out pretty well.
At least, you know, and I'm not saying selling it is wrong. I'm just don't get me wrong. But if you sold it and you see something like that, if you're short,
Hmm.
pay attention. Don't be stubborn. Um, I take that for what it's worth because if you're stubborn, and like I said, I have a stubborn streak. I've been no, I used to get caught in those. Like, oh come on, the market's wrong. Oh, I'm stuck. I can't be wrong. I'll wait for it to come back, and I swear to God, I'll get back. I'll get out. All those when you see flow like that, the, the best loss is the first loss idea. Don't just get out. Um, Now I'm stubborn about following a plan. I don't really get in for any other reason unless it fits my plan. But
Nice push in.
interesting.
Nice push in crude. We didn't get exactly up to $65. I'm definitely going to be watching that price tomorrow. And this looks like a market that has the potential to break out, but we also have to remember what we're talking about here. This is crude oil. It can stay in this range forever. So if we see some rejection up near 65s, this is not financial advice, but I may be short.
Well, look at the daily 200 moving average.
63.49.
You have 63.49.
Daily
Um,
200, yeah.
yeah, all right. Because I have it a little different.
Where's
Because I
yours?
just mine is at 64.88. Because
Okay,
I only have the October
got you.
data.
So I like that area, and we talked about this during the opening call as well, where if we look at probably one of the more significant daily candles that we had since we fell into this consolidation, right around that area. Look at 50% of, or look at the high of today's range, right around that 64.73 ish zone. We haven't traded inside this candle since we printed it. Pretty heavy sell side imbalance here. We're filling it. Do we have enough buyers to fill the entire thing, or is this where we fail? Crude has been presenting some great intraday trades, and I do not think that we are stopping anytime soon. Got crude inventories tomorrow as well for all of our crude traders. Just make sure you pay attention to that. All right, let's get to some questions here. I think we did our big four, unless you got anything else to talk about in crude, Coach Paul.
Nothing else in crude.
Get to some questions. We got two questions in gold. One from Mo: how does one actually trade gold in movements like we saw today? And for Lana, where do you think gold is going? Answer that second question first. Personally, I think gold is going higher. Does that help me make day trades? It might, right? We're looking for opportunities to get into this trend. Uh, I can't really call out a price. I mean, we're in uncharted territories, literally. I think 3,800 is just the next whole number level that's above us. It's still about 2% away. Do I take day trades with the expectation that we're going to hit that level? Probably not. But I do think 3,800 is the first. It's a pit stop on the way to where gold is really going, and that might be 4,000 now. Uh, how does that information help us day trade, right? Where I made money today in gold shorting it. Uh, if my higher time frame bias is to the long side, I may get a short setup, but I have to, and like back to Coach Paul was talking about, and this is for Mo as well. If I find myself short on a day trade in gold, I'm taking the profits off the table. I'm not holding on for a complete reversal of this entire move because I need to make X amount of dollars. The market literally could not care less about what I need to pull out of this market, right? So for Mo, how do you trade gold in price action like today or any day? Uh, have an idea of, I think, where the higher time frame is going, and then have an idea of where your specific trade setup fits in that overall time frame. I was talking to some of my VIPs about this today, Coach Paul. Uh,
Mhm.
I got short, and if I had unreasonable expectations, this is a losing trade. Um, you might say, Coach Paul, don't even short it.
I take one side. So, the question is, so how do you trade it? You have here's just like you would trade any other market. You have to have a plan of action.
Yep.
You have to look for some type of setup that is repeatable and that you understand the setup. That you actually have done some back testing or at least some forward testing. Um, that it comes down to this is a setup that I've tested. It's repeatable. I'm comfortable. Like we talk about opening range breakout or bouncing off the 200, something that you've seen before that you can codify, that you can put it down in the 4 steps with a checklist. Look for that structure, frame out the risk, how much you can afford to trade, and take the trade. Now, me, I'm only looking to buy gold. Now, on a day trade, I might see some exhaustive buying, and then give me examples to take a quick trade. That I will look at, but that's why I asked earlier. I didn't see any exhaustive buying that failed. So, and this is really important. You trade it to be consistent. You have to have a consistent process. Any business, if you're going to go ask for a loan from the bank, they're going to want to see a business plan. They're not going to say, well, and if you come on and say, well, no, I don't know, I just know it's going to happen. Well, it's a very, very high probability the bank's going to go, well,
Let me know when you
ask
know
the
what's good.
bank across the street.
Let me know when you're a little more sure.
Yeah, a little more. So I might be, is you have to have a plan, and a plan has to be a repeatable plan. It has to be business like. And that's a great question. So coming into that, don't you can get randomized so easily without a plan. I put it, it's like a compass because you're always in uncertain territory in trading. There is no certainty. there is probability. So without a plan, and when we see the failure rate, it's mostly trading on feel or whims. Um, get a plan of action, and follow that. That is consistent. That's your compass.
Stuff, Coach Paul. We got some more questions here. James, do we expect indexes to drop if the rate is not changed for more than half of a percent? Uh, I think the probability right now that the market is looking at a 50 basis point cut is pretty low. I would be surprised if we do see that tomorrow. Do I expect the indexes to drop? I expect volatility, and I don't want to be non-committal here on an answer, but I do because I don't know. The market could respond favorably. The market could respond and say, "Hey, we don't like that. We don't like that news," or "Hey, we like the rate cut that we got, but we don't like what they're saying for what we might do for the rest of the year." So I really try not to assume where the markets are going to go. Right? I think and we'll go back and look at the charts from the last rate decisions. It's framing out how the market responds and then going from there. Um, because it is almost impossible to tell how the market is going to respond. What would you say, Coach Paul? It's just shouldn't say almost impossible, right? The trend is to the upside,
Well, that's the expectation.
right?
Continue. Now, if they didn't see if there was like no cut, and this is my expectations, and I don't trade on my expectations. I trade on structure. But by expectation, if they didn't cut, this market would initially react with a violent downside because it's something that the market is expecting that didn't get. So it would go the opposite the way it came. But we again, it goes back to dealing with uncertainty. There's expectation, and then there's reality. Um, so I would assume if they didn't get that, even if they get it, we could break. Um, and I could make an argument that by cutting, they see something that we don't. So there's always some story.
Right.
Trade, trade in the present.
Um, Speaking of which, we just went back trading the present. The present will be tomorrow when we get this Fed rate decision. I just went back to the last Fed rate cut that we had. That was December 18th, 2024, just to kind of frame out again. We don't can make an assumption about how the market is going to respond, but the market is a collective opinion and emotions of a bunch of different market participants, right? So it really is about how market participants respond. But what we can see is if we, and this is the 30-minute candle from that Fed rate decision, this is gold. We'll take a look at all the equity markets as well. Initially, we sold off for the next however many trading days. Look at how important that price became, right? Where we traded around that for a while. For me, that's more information than trying to make money off of uh, the guess of where the market is going to go, right? Because now I could frame out this price range for however long it's relevant, right? So really, what I'm looking for is that information from the market. Let's take a look at the Nasdaq. Uh, go back to December 18th, 2024 in the Nasdaq. Here is that Fed rate cut candle, and not saying that this is going to happen the exact same way, right? If we look at a another rate cut, I believe it was in 2023, we saw the markets rally. But could it present a decent trade in the in that time frame? We had a 3% sell off the last time, but look at how important that level became from that sell off later on. Now we're talking about 6 days after that, we come back up to this price and the market rejects. This is information now, right? The market responded to something that was market moving, And now that gives me a frame of reference going forward. And in this one, look at how many times we reject in this area. We come back up, reject at it again. Remember February, that huge sell off that we had, where we sold off, 25% in the Nasdaq. Look at where it started from, where we came back up to these prices and then sold off from there. So this price meant something, you know, 2 months after that print, right? And sometimes we're trying to figure out what happens 2 seconds after the rate decision is made. But you could use that information for, again, however long it's relevant. And I think that's, to me, what's more important right now, uh, or looking at that. But the mother of all shorts, yeah, that was
I
go ahead, Coach
I
Paul.
remember that like it was December. That was
Yeah,
awesome.
yeah. So that is how I'll be looking at this. We got some questions on the currencies. What would a rate cut mean for current Coach Paul? You know I'm throwing this one to you. What would a rate cut mean for currencies? Is there a mechanical response? Curious about the euro. I think we are seeing the dollar index at lows of the year. Is that right? No, not yet.
It's not years, but
Near the lows.
yeah. Um, it's a good question, and I don't have a good answer. Um, if but economically and according to textbooks, if interest rates are being cut in one nation, the other currencies, not uh, if nothing else changes there, should be friendly to those currencies. They should strengthen. With the dollar interest rate being cut, it makes it less attractive for capital because of the interest rate. Now, with that said, what if Europe decides they're going to cut rates and we could go on and on? But in the textbook, that should be um, bearish to the dollar, friendly to the euro currency, and friendly to gold.
Friendly to gold. JD says the Swiss franc is ripping to the upside. Yeah, we are seeing the dollar, a couple ticks off of the yearly low, which would mean that, in some of these other currency markets, we're seeing a little bit of a rally, right, near some of their yearly highs. So look at the Swiss franc, look at the euro, getting ready to trade highs of the year. Interesting stuff. There are a bunch of different markets. Do I suggest? And I saw someone in the chat saying, paying attention to all these markets make you a master of none. Um, if you can identify a setup and then trade the market that's presenting you that setup, that may be better than, and maybe, right, it's going to be different for every person, uh, forcing a market that is not giving you a setup to provide opportunity to you. And in these currencies, 36 different markets, there's no way that anyone at TopStep is going to trade all 36 of them, right? That would be a fool's errand for sure. But there is opportunity.
And one other thing on that comment, I don't think you can master any market. You master your process.
Agreed.
Um, Now, the beauty of futures is there's it because it incorporates all these asset classes um, versus stocks. What is I don't. It's a crazy percentage of stocks that move in the direction of the indices. Um, with futures, you, there's so much opportunity. That's why we review. You don't have to be a master of any of them, but if you have a master of your process, you can seek the opportunity that you're looking for. Um, in certain markets, there is, I'll give you a story about the one bond room, 30-year bonds. There was a trader who was the king of the bonds, was known throughout the world. His name was Tom Baldwin. He was a monstrous trader. I mean, we're talking thousands you have position in bonds.
Mm,
Personal trading. It wasn't trading for a fund.
yeah.
Now, I mean, he was making tens of millions of dollars a year. When the bonds died out, 30-year bonds, and they went to 10-year, and the floor went away. It was even before the floor went away, the volume left there, and he couldn't duplicate that. So, you're only as good as the market you're trading. If there's no movement, I've been there. Like the old saying, a skunk couldn't make a cent in that market. You have to find a opportunity. So, what I do advise is checking a couple markets. If you have a solid plan, if you can easily move from one market to the other. That's the beauty of access.
Yep.
Now, without discipline and a plan, yeah, you're right. It's a whole lot of nothing. But with a good plan and access, there's a lot of opportunity.
And we got a comment here. I'm still trading ES. It's nerve wracking to think of any other products for now until I really get it. No problem with that. No problem with that at all. Right. If you're still honing in on what your strategy is and exactly how you approach the markets, there's no problem. Actually, it's advised to probably stay in one place until you know what you're looking for. Um, it's probably not a bad idea to do that. Uh, all right. Quick question here from Balaji. Which opening range break is preferable? I see 3 minutes being discussed every time, but it seems Coach Paul talks a lot about the 30-minute. Thanks, Coach Paul. What do you got?
30-minute overnight um, for the opening range breakout because it's smaller ranges and less volume. So the 30-minute is an adjustment to that. During the day, a 3-minute or 1, 3, or 5-minute opening range breakout, whatever you're comfortable with. So shorter term for the New York session, longer term for overnight or Asian session. Hope that clears that up.
Whatever you do, keep it consistent. I think more than the time frame you use, right? Somebody can use a 2 minute, 15 minute, 3 minute, 5 minute, 30 minute, an hour. Uh, it's about how the market responds to those prices more than anything. You know, they're all going to have similar success and failure rates because that's just how trading works. So I would avoid trying to chase the perfect time frame. Just find one that you're comfortable with. But I do like that 30-minute overnight, Coach Paul. It's been a pretty good one. But that's just us, right? Somebody else might say, "Hey, you know what? They look at a 30-minute. That's terrible. I look at a 45-minute, and it's way better."
Yeah, you could actually 15-minute. I don't.
Yeah.
I will tell you this: you have to be comfortable with it, and you have to be consistent.
Yep.
One of the biggest dangers is you look at you have the 30-minute, and then it's not going the way you want it to go. So you look at a 15-minute or a 60-minute to verify that you were right in your position. That will get you into a lot of trouble.
Yep.
Don't do it. You enter on a 5-minute chart, you need to exit there or just get out. It means one of the biggest dangers in trading is um uh, the inability to follow a plan. We want instant, and I struggle with it to this day. No, I much prefer instant movement.
Oh yeah.
So I know this. I if I sit there and watch every tick and I have a trade, it's just like pulling me into this layer of abandoning the plan. Um, don't I don't, so I put something on, if I have a measured risk, if I have it on in a 30-minute, I come back and check it every 30 minutes, that position. If it's on the 5-minute, I don't watch it. Come back, see if anything changed, like it's sitting one under a moving average or something. But for me, and you may suffer from this, if you're just staring at every tick and you're absorbing that, it's good. It's bad. It's good. Oh, they know. Who the hell is they anyway? I can guarantee you Goldman Sachs isn't watching a prop trader's trade. There's no they. It's you.
Yep.
And it can feel that way. I don't understand that, but you have to really, I want to go back to it, is you have to define your entry and exit. And it has to be consistent. So when you sit there and you're watching every tick and it's not doing what you quote unquote thought it should do, you're creating anxiety, and anxiety is the enemy of good decision making, period. So like I said before, get into a process, a plan.
All right. We got a couple minutes here to answer one more question. Psalm 91. Paul, over the years, has your process changed based on the different market conditions? Seems like there is no perfect method. How do you adjust, and what tools do you use to help adjust?
It's a great question. Um, I have trouble distinguishing between a position or a swing trade and a day trade. So, because in a swing trade, you really have to be patient. You really have to, swings, it's a swing trade. So short-term swings mean nothing, but it's all relative. So I had to adjust. And one of the biggest adjustments was finding volume. Working with Coach Jay, that has really helped me in my day trading. Um, Volume is the confirmation of the advertisement of price, and I still use the 200 moving average, but now I get to use a volume analysis that works. So, difference between price and volume is very important that I've discovered. But I still use, I was baptized in trend following. That's why I still like to prefer to trade one side of the market. Um, so that hasn't changed. How I execute in the day and the time frames has changed. I use a 3-minute now. I wouldn't have used that before. 3-minute is important to me on the opening, and I'm watching the 3-minute. So though that part has changed, but and that's a really good question, because your rules can change, but principles cannot. You cannot fool with principles. Um, so and you're developing your trading style, no, principles don't change. Now, what you're comfortable in doing is different. I would have never traded a 3-minute chart before. Now, I've learned with volume that can be very valuable in a day trade. So I adjusted that way.
There we go.
Great question.
Good
Thanks.
stuff. Good question. All right, Coach Paul, anything you got before we go for the day?
Do not push it in front of that number. Think professionally. Um, if you're taking a position into that, then accept the possibility of big loss. You could have you have a big win. I'm not saying you can't, but here's what happens in front of these numbers. Market makers cut their size they might even just say, "No, we're not. I'm, I'm one up." Um, so that's why we have these sharp reactions. It's once again going back to volume. The market makers are cutting back their size. They're cutting back their size. They're cutting back on what? Not price, but volume.
Yep.
So that's why we get these spikes. Um, I advise not to trade in front of the announcement. And if you really, there's nothing wrong with not trading tomorrow. That's something to consider. With that, I give it back to you, Coach.
Awesome stuff. Thank you for that, Coach Paul. Understanding that the results of our actions, our decisions, are they come at the end of the decisions that we make. Right. We said that yesterday, and somebody flipped it up on Twitter and said, "Oh, I'm supposed to accept when somebody logs into my account and like places a random trade." And it's like some crazy hypothetical shit that probably happens to 1/2% of the people that are trading, maybe not even that. If you got to make excuses and you're looking around the room and pointing at why I took this catastrophic loss on my account, even if there was a platform issue, right? How many people are so over leveraged in a position that platform issue, no platform issue, you sneeze and your finger comes off the flatten all button before the market stops you out. Uh, accept responsibility for the outcome of your decisions. Um, manage your risk, trade well, and we will see you all tomorrow. We got Coach Hoop doing a class coming up in Discord in just a couple minutes. And then Coach Ray and Coach Vince, 6 p.m. to 7 p.m. Central Time. Coach Dakota with Slow Markets tonight at 7:30. Aaron with the London Open, 1:30 a.m. Central. D with the Euro trade pushed it back to nope. D is staying at the same time for this week. I think we're going to push that back later. So a ton of content still available for you at Topstep TV. Hopefully, all in the interest of helping you become a better trader. If you haven't done so already, hit that thumbs up button. We appreciate you all being here. We will see you.
Bye.
Bye.